Good afternoon, all of you. Am I audible? Am I audible? Yeah. So, good evening, all of you. So, today we are going to understand something which is very close to my heart, which is GST compliance. You all must be wondering, we are into 8th year of GST. So, is there anything new that is happening for us to learn at this point of time, right? We know that GST is a ever evolving law. There are a lot of changes. It is not restricted only to the law and not only with respect to the substantive provision, but also relating to the complaints part of it as well. So I thank the organizer for giving me this opportunity, and I'm very thankful for the participants who have joined here. So in the next 1 hour, we will be taking you through the important compliances that are mandated by the GSTN portal in the recent times. Further to that, we will also understand the consequences of not doing certain compliances so that the seriousness of compliances is highlighted. So when it comes to this particular 1 hour of session, we will understand the basics. Quickly, we'll understand the basics, not going in detail table by table. And also, with respect to certain tables, we will understand what are the consequences, what are the changes, and what is the intention of government for bringing out certain tables so that in the form, so that you understand and appreciate it in a better way. This is basically for more towards better compliance and understanding the intention of the government. So when it comes to key returns, everybody knows when it comes to GST, it is a GSTR1, GSTR3B, GSTR2. These are all the returns which we always talk about. So what is the issue with respect to GST in the recent times is that many times whatever the input tax credit the recipient is unable to avail, that is a common problem across all taxpayers. So this happens because the taxpayer is not filing the GSTR1 on time, or there is always a mismatch between what is filed in GSTR1 and what is reflecting or what is paid, tax paid with respect to the outward supply. There is a mismatch between GSTR1 and 3B. And there was something called as GSTR1 or GSTR2A, which was enforced till 2021-22. Now, after 22, we are into GSTR2B. After that, to some extent, I would say the input tax credit has been settled, right? So now the question is, you're saying on one side it is settled, then what is there to revisit with respect to input tax credit? I will park this question till the end because there are a lot of things which are interesting and which are very important from the government perspective, which are likely to be introduced, and it's going to have a significant impact for majority of the compliant taxpayers. I'm not saying non-compliant. Compliant taxpayers will have difficulty. So when it comes to GSTR2B, once the GSTR2B is reflecting correctly, then it is going to get auto-populated. That is what is happening now. So with respect to that, so where is a question of issue? Now, if you ask me, there are many times there is a difference between GSTR when it comes to at the time of filing 3B, whatever is we have the input tax credit that are available in the books are not matching with what is appearing in the GSTR2B. So the mails are getting exchanged saying, I have issued the invoice, but it is not appearing in my GSTR2B. Then the taxpayer, that means, it can be a service provider saying that, no, I'm coming under IFF. So a lot of discrepancies happens because of delayed filing, because of IFF, because of non-reporting, because of non-payment of taxes. So these have become the common issues when it comes to input tax credit. Because of these issues, there is a reputational loss, in the sense lack of trust begins. Once the trust is lost, everything is lost. So what happens? Every vendor is asked to file a monthly return. There are cases where we are practically seeing, even if the supplier is good, even his services are good, even he is rendering much beyond what is expected, there are cases where unless and until they see the GSTR2B credit, they do not want to release the payment to that extent of taxes. I mean, taxes to the extent of input tax credit. So they withhold the payment. So it has come to the point that the GSTR2B is acting as a critical factor for anybody's reputation. So it's very important for us to file the GSTR1 on time and GSTR3B correctly. This is the point that I want to drive here. And also there are dispute between vendors. Vendors are saying, like, I have filed my return on time and they have not made the payment, or there are vendors who are absconding, or they have not filed their returns for a long time. There are circumstances where they have their GSTN is cancelled. So these are some of the issues which we come across when the taxpayer trying to avail the input tax credit. On top of it, wherever there is a difference between GSTR1 and 3B, or between 3B and 2B, immediately what they get is a notice. It is just not the intimation. It's just not ASMT 10. It is even DRC 01A or DRC 01. So it is very important for you to handle the complaints correctly to avoid getting any notices. And the next nightmare, I should say, is the reconciliation. So when it comes to reconciliation, whatever method you follow, whether as professionals or as accountants, we may follow Excel system, or we may have our own software tools, or we may use the system software, whatever is provided by GST. Whatever may be the method you follow, the reconciliation becomes a nightmare. So every statement that you prepare, every return you prepare follows a reconciliation. It is just not one reconciliation, multiple reconciliations. We all know that yes, GSTR1 to match with GSTR3B, so it's going to be simplified. See, I'm handling this session when at the point of time when we are talking about GSTR3B is going to get auto-populated from GSTR1, and GSTR3B's input tax credit is directly going to flow from GSTR2B. It means that output is frozen, input is frozen. The taxpayer, what he needs to do is output minus input also automatically comes. What the taxpayer is expected to do is just by click of a button, pay the taxes, and your return is complete. It's going to take 5 minutes of your time for filing your GSTR1, because that's also going to get auto-populated from your invoice, which is going to flow from e-invoicing if you are under e-invoicing, which is going to, now currently it is 5 crore and above. Over a period of time, it's going to be common, or it's going to be mandatory for all taxpayers, assuming that situation is going to come true. So the GSTR1 is also going to get auto-populated. GSTR3B is also going to auto-populated. So the taxpayer is just, the income GST return filing is going to be so smooth. By click of a button, you pay your taxes, and then with the OTP, you submit the return. It is just going to be that easy. And when we are nearing to that reality, I'm bringing out some issues saying this reconciliation you do, that reconciliation do you, these are problems. Am I exaggerating? You may feel. In the next 30-40 minutes, you will understand what are the complications or what are the issues that we are facing. So that whatever I told you before, which is going to be a reality, is still a dream. When it comes to practical point of view, we still face issues with even the primary GSTR1. That's a fact today. So even when we say that GSTR3B input tax credit is flowing from GSTR2B, still some kind of reconciliation is very much needed. So when it comes to the year-end finalization, we face practically, there are a lot of challenges we face. We are unable to close entries. There are multiple reconciliations spread across various Excel sheets. So put everything in one place and do the reconciliation is still time-consuming task. So in the next 40-45 minutes, I will explain what are the ways in which we can do it in an effective way. In the last 15 minutes, we will reserve for Q&A. If anybody has any questions, they can raise, right? So let me move on to the next one. What are the best practices that we should follow? The first and foremost is that all of us should file the returns on time. Though there may not be any penalty or late filing fee for GSTR1, it is important for us to file IFF or GSTR1 on time. Second most important thing, do the reconciliations. What are the reconciliation? It is just not one reconciliation. There are a lot of reconciliations. I will take you through when the next slide comes. And use some software. It can be, don't restrict it to Excel. You may say that yes, Excel is very comfortable, but still beyond Excel to make us very, foolproof system, error-free system, it is important to follow some software, right? And pay taxes on time. Payment of taxes is also on time is very critical. And even if you do not have any tax or any outward supply, we are required to file nil return. And the last important thing is that as per GST law, we are required to maintain the documents and records for a period of 6 years. So that means 72 months records we have to have. So it's better to keep all the GSTR1s, 3Bs and reconciliations, all that for a period of 6 years. So it's not that our database is going to be there in the GSTN portal forever. There also there are restrictions. Month on month, they are, one by one, they will be removing the old data on a for a period of more than 6 years. They will also be not maintaining. So it's very important for you to keep a database, store it in a separate folder so that you are accountable for your own data, right? Next comes the penalty. Maybe with the late filing fee may be very small. In case of any nil return, you pay 20 rupees per day. And in case of any taxable amount, whenever there is a tax, you may pay 50 rupees a day. It may look small, but it's just not the payment, delayed payment. There are certain consequences, as I said, because of non-filing, because of non-availment of input tax credit on time. The recipient of your service or buyer of your goods is put into trouble. It is just not you. It is a person who is depending on you. And for any delayed payment, it attracts 18%. And also, one more important thing, as a taxpayer, you may say, yes, I have some financial difficulties, I am unable to file. But still, there is every possibility that because of you non-filing, your own input tax credit can also get blocked by the department. And also, in case of any taxpayer who's into e-invoicing or e-way bill, their e-way bill can get blocked if they don't file their returns on time. So these are some of the very important things for which you have to, it is necessary for you to file the returns on time and without paying any late filing fee or interest or penalty. And embracing the technology is the order of the day. So embrace the digital, file your returns using any kind of automated software. Nowadays, you can create your own tools, or there are GST and portal gives tools for filing. I see that they use GSTR1 for, supported by GSTN for filing their GSTR1. But for 3B and 2B reconciliation, they use Excel. Whatever is that comfortable for you, you can do that, but please do not use it manually, because reconciliation is very important to that extent that invoice level reconciliation is important, right? Invoice level, in the sense, if a supplier gives invoices, all the 4 invoices are to be exactly matched. It is just not the lump sum or total of 10 invoices. No, it is 10 invoices comprising of 5 vendors and 5 vendors giving 2 invoices. Everything 1 to 1, all invoices are to be matched. Now, this is the just a pictorial form of how the data is flowing. We know that once the GSTR1 or 1A or IFF, before that I'll just come to you what is 1A. Once if GSTR1 it comes, then it goes to IMS. IMS also we will learn in detail, and it goes to the recipients GSTR2B. From GSTR2B, it goes to GSTR3B of the recipient. Then this is how it gets captured. Next, let's take the GSTR1 quickly for 5 minutes, because there are certain important tables which have become mandatory in the recent times. One is that table I have just plotted. These are all very old ones, which by now you should be very much familiar with all these tables. So when it comes to GSTR1, the basic tables are your name, GST number, all that. It's all pre-filled, so you don't have to pay much attention to it. And then when it comes to anybody's, then when it comes to table 4, there are 3 parts to it. There are B2B, wherever there is an outward supply relating to B2B, and also RCM or e-commerce. So I would like to tell one point about e-commerce here. Whenever you are supplying through e-commerce, you are required to fill your details in table 4. So wherever there is an RCM which results in outward supply, that also should come in the table 4. So that is what is primarily about ABC. Then the table 5 is all about B2C, and also the interstate larger invoices. Whenever there is an interstate supply for an B2C customer, earlier it was 2.5 lakhs. Now that has been reduced to 1 lakh. So it can be through e-commerce or it can be through normal course of commerce or trade. Either way, that has to be reported in the table 5. And table 6 is for any export sale or any SEZ sale or any kind of deemed sale. Those are to be reported in table 6. Then table 7 is all about B2C small. Whenever we report anything relating to B2C, it has to be reported in net of debit or credit note. Only in case of B2B, it requires a separate identifiable and distinct reporting of credit notes or debit notes. Otherwise, you can always report it as a net. Then table A is about nil rated, exempted and non-GST supplies. And 9, all amendments to table 5, 6, credit note, all the amendments can be all amendments can be put in table 9. When it comes to table 10, taxable outward supply to unregistered person. Then table 11, it talks about advances. Currently, if you look at it, I do not know how many taxpayers' advances and adjustments of advances are all perfectly mapping and matched. But a time will come where the department will call for exact mapping of advances and adjustment of advances with invoices, matching it with the books of accounts and also the balance sheet as on 31st of that respective year to backwork and then tally. So if it is 1 or 2 invoices, matching of advance against the adjustment of advance is not very difficult. But where there are certain industries in which the advance and adjustment of advance becomes a regular affair. Say, for example, if I have to mention in case of hospitality industry or in case of any hotels which book banquet halls, where the bookings happen always in advance, party hall. So these are some of the cases where the taxpayer have to has to take extra care in booking the advance and adjustment of advances. The next is that HSN-wise summary of outward supply. In table 12, earlier it was not mandatory. Now the HSN-wise summary, whether you are reporting 4-digit or reporting 6-digit, 4 to 6-digit reporting of HSN is very, very important. People, the taxpayer who are doing in e-invoicing, it's very easy for them because there is a option for downloading your invoices with the HSN. So what you need to do is just pull out that and summary of it and then incorporate here. Whereas for other taxpayers, it is they have to maintain HSN-wise summary. And table 13, it shows the document issued, how many documents are issued. You may ask, why is the department tracking so much of details? What is the need of the details, so many details? Because now if you look at it after AI and then data mining, the department wants to keep track of every taxpayer, not only the taxpayer, supplier, supplier. It just goes in circles. So once when they catch hold of one taxpayer, the complete supply chain will be in their hand. To your surprise, if they were tracking a supplier who's, say, for example, supplying a laptop, they will be in a position to map even a person who's rendering services for that particular laptop in after 2 years. So that kind of mapping is happening. So this is important where a person who's, say, selling steel is not in a position, is not buying something which is irrelevant, right? When I'm supplying something, whatever I procure, whatever my input tax credit, whatever I avail as my consumption should also be correlated. It cannot be completely diametrically opposite to what I supply and what I procure. So the data that department captures is to match certain things. This is for some kind of investigation or fraud or any kind of malpractices happen. They will be able to, before even the incident occurs, they will be in a position to serve notice and tap it at the right time. So this may be, many may consider that why department is asking even the normal good taxpayers are penalized, but it's so unfortunate. All the good taxpayers, in front of government may not know who's a good taxpayer, bad taxpayer. So it collects data from every taxpayer, keeps it in its repository. Whenever there is any deviation comes, immediately they will be in a position to issue notice. Then when it comes to table 14, this is something only for e-commerce operator who's a supplier, okay, who's deemed to be a supplier. Say, for example, Ola, Uber, or Urban Clap. Okay, so what they do, they are not intermediaries. They are also e-commerce operators. They procure the services and then renders to others. So for those kind of e-commerce operators, as per section 9.5, they are required to report their turnover. They are liable for payment of taxes. That is what is required to be reported in table 14. So anybody else who's supplying through e-commerce operator will punch the details in table 4. So this is very basic. And now when it comes to points that we have to keep in mind when it comes to GSTR, one is that adjustment of adjustment of advance and advance reporting, HSN, and e-invoicing. See, when I say e-invoicing, there are certain discrepancies. Every invoice is generated through e-invoicing format, so it is very much sure that once e-invoicing is generated through portal, that is practically not possible for a scenario where it does not appear in GSTR1. But towards month end, when we look at it, there are misses. there are invoices which are generated through e-invoicing, but still it is not appearing in GSTR1. So a proper reconciliation and care must be taken. How many e-invoices are available, generated against what is appearing in GSTR1. So as I said before, this is one kind of reconciliation which is adding on to our basket. More than GSTR1 and 3B, inside GSTR1, over and above advance and adjustment of advances, over and above HS and summary reconciliation. This is yet another reconciliation where you have to do e-invoicing with the GSTR1. Next is that locking of invoice. Now we are talking about locking of invoice in place. So when it comes to locking of invoices, what does it mean? So whatever invoices that, whatever data you are punching in, whatever details you are filling in GSTR1, it will get locked. That means you will not be in position. It will get transferred to GSTR3B. There can be a no scenario where you will be in a position to explain or pay lesser taxes than what is reported or what is getting auto-populated in GSTR3B. Let me take you with an example. If you have entered 1 lakh, right, 1 lakh at 18% GST, 18,000 in your GSTR1, the same is auto-populated in GSTR3B. So you are required to pay 18,000 rupees as your output tax liability. Assuming you have done some mistake while entering, I'm not saying mistake cannot be done, cannot occur. Error is human. So every taxpayer is bound to make a mistake. For that, they have introduced GSTR1A, right? GSTR1A. Over and above that, they have introduced IMS facility. Through IMS, your recipient, that means your buyer, can also say that this is not the amount that I have, procured from you. I have purchased it from you. So when we are missing out two opportunities, and then still, if we have not carried out the corrections, then the government is left with no option but to make you pay the taxes. So after eliminating two steps only, the third step is coming as a locking of invoice. So what are the things where locking of invoice is in place? If you look at it, where you have crossed the September due date, right? You cannot do. September due date is completed. I mean, the due date November is completed, but still there are certain invoices which you have not entered, still you are entering. In such cases also, there is no way you can, avail the input tax credit. And there are certain circumstances where GSTR9 is already filed, but still there are certain input tax credit which is appearing. There is no option for you to avail those input tax credit. Second is that once the GSTR1, you can file correct only once. You have made some error, so you are trying to correct it. You can correct it, right? Same thing you cannot recorrect. That means any mistake you can correct only once, right? So whenever you do any monthly return GSTR1, the only way to have a cross check is that do a parallel reconciliation for Y to D. That means year to date. If you are doing for a month of, say for the month of July, April, May, June, cumulative figure also you have it in place. So what is the reconciliation or what is the outward supply for the month of July? At the same time, till the month of July also you have it, so that it will be easy for you to match it with your books of accounts. It is always advisable to file any of your returns, whether GSTR1 or GSTR3B, directly from your books. That means it can be whatever software you are using. From there, directly filing would be easier for you to avoid any errors. So what happens with, instead of that, we get data through PDF format. We start entering in Excel, then we total it up, then when we are trying to upload, that's where the error comes. That's where the gap exists. Instead of that, whatever you are entering in your books of accounts, same thing. Nowadays, every software, every financial books gives you the option to file your returns directly. So that can be done directly. This is all about GSTR1. Now I'll come to GSTR1A. GSTR1A was introduced long back. This is not something new. In July 24, it's almost 1 year now. There is no need for me to talk about GSTR1 in 1A in detail now, because all of you are aware. But still, many of us are not using. We feel that it need not be, because obviously it is only an optional return. It is not a mandatory return. When do you have to use GSTR1A is only in case you have done any error which you notice after filing GSTR1. So the due date for filing GSTR1 is 11th of every month. So you notice that you can file even before that. You can file it on 7th, you can file it on 8th, whatever may be the date. But the window for opening the GSTR1A return opens only on after 11th. That means you can do any correction after the due date, right? So the rectification, whatever you do, will be effective in that same month itself. That is one beauty that has been introduced through GSTR1A. Earlier, what was happening before introduction of GSTR1A, there is no mechanism was in place to correct any return. Once it is wrong, it is wrong. So that only way to correct is either you have to pull out that record in the subsequent month, do the correction. That was the only option available. So any error that was committed was causing disturbance for the recipient. The whole idea of whatever we are discussing today is more about how to enhance the exchange of information between the supplier and the recipient of service, so or buyer and seller, how to enhance the quality of compliance, how to eliminate the error. So this is the objective. In simple format, if I have to put it, the government is trying to put a system in place wherein every recipient is availing the input tax credit at the correct time seamlessly, right? Every supplier is paying the taxes on time, and it is not by any kind of coercion or any kind of penalty mechanism, but through digital mode, through online mechanism, by enabling the technology, how the supplier and the recipient, buyer and seller, can communicate each other through system, not verbally or not over phone, through system, so that the self-governance is imposed. So that's the basic objective of the whole GST system, I would say. So with this in mind, till last 7 years, we never had nothing called as rectification. Whereas now, if you look at it, they have introduced in the form of GSTR1A, rectification is possible. What can be rectified? Assume I have filed my GSTR1 on 11th. I have missed to report certain things, right? I have omitted, or instead of 10,000, I have put it as 1,000. So in such cases, immediately after noticing the error, the taxpayer, what he can do, through GSTR1A, the return can be filed. The rectification can be carried out. So by carrying out the rectification, the recipient, the buyer, will be in a position to take the input tax credit in the same month itself. So that's the beauty of it. He need not wait, provided the supplier does the correction within time. So the time, as I said earlier, it need not be in the same month. Like, assuming his taxpayer is filed his GSTR1 on 7th, right? So 8th, he cannot carry out the correction. He has to wait till 11th, till the due date. So he can carry it out on 12th or before the due date for filing the GSTR 3B, which is 20th. For all you know, he may not have funds, so he may even, file it with the delay 23rd. So 23rd or 24th, till the day he files the GSTR 3B, the GSTR 1A return will be open for correction. So if he files it within 20th, then the recipient also will be in a position to avail the input tax credit. So that's the basic idea of introducing this GSTR 1A. So if you look at the GSTR 1A form, it is exactly the same as GSTR 1. Nowhere it is different. But one thing which you can't correct is GSTN number. If you have punched in some GSTN wrongly, that cannot be corrected. Then second thing is that you, anything that you are doing, any GSTR1 through 1A, if you are carrying out, you can see the what was originally filed, what was the amended, and what is the differential tax liability. All that you will be able to see it through 3 returns. One, GSTR 1A, there is a return, which is originally which you have filed, which will not undergo any change. GSTR 1A, if you look at it, the new GSTR 1A also you will see. GSTR, there is another form, comparative form, GSTR 1 versus 1A, which will have in this table, in the screen I am showing you, the GSTR 1A has got 30 invoices showing some value, and GSTR 1A, in that the value was missed out, value was wrong. So the total whatever was carried out, say in GSTR 1A, whatever was carried out was 52,812. That was the central tax. The tax amount was wrongly punched. So by this mechanism, you will get to know what was that exactly missed out. So just to add on, as I said before, e-invoicing versus GSTR1. The next reconciliation is GSTR1 and GSTR1A. So it is very important for you when you want to tally the outward supply or the sales, the simple turnover reconciliation with books of accounts. It doesn't end with what is the summary of sales that I have reported in my GST return and my turnover that I have already entered in my books of accounts. Internally, these many reconciliations are to be carried out to say that this matches or this does not match. If that does not match, you should be in a position to say why it does not match, where the difference lies. Then what is the advantage of filing the GSTR 1A is that, just to make you understand through pictorial form, the transaction, whatever is happening, is entered in GSTR 1, outward supply. When you are filing GSTR 1 on time within due date, it goes to the recipient's GSTR 2B on time. And when the recipient is filing his return, GSTR 3B, he will be able to take the input tax credit through his GSTR 2B, and 3B will auto-populate, and then everything will go smooth. But if GSTR 1A also, if you are filing on time, the same effect will be given as if you have filed within time. So whenever you make any mistake, do not hesitate or try to cover it up, because any mistake that you cover it up will pop up somewhere. So it is better, if you have done any mistake, let's understand and solve it so that the due credit is passed on to the recipient. If you do not file it, the GSTR 1A, then what happens? The correction can be carried out only in the next month. As I said before, GSTR 1A is not a mandatory return. It's only optional return. If you want to file, you file. Otherwise, next month, you do the corrections through amendment. When you do the corrections through amendment, or you file the GSTR 1A with the delay, it's all one and the same. The recipient will not be getting the input tax credit on time. That means in the same month, he will be able to avail the ITC only in the subsequent month. So why I am highlighting here is that going forward, GSTR 1 and 3B will be frozen. So if you have done any mistake, it's necessary for you to correct it then and there through GSTR 1A. Now let's move on to GSTR 2B, which is also very basic return. I mean, I do not have to tell at this point of time, after 8 years of GST, if we talk about what is GSTR 2B or 2A, I don't think it is worth your time. So in GSTR 2B, you have to be very, very careful on the number of fields that are appearing. There are certain things which says ITC ineligible, ITC not available, ITC to be reversed, ITC rejected ITC. You have to keep a watch on every sheet. Since the data is available in plenty and it is very informative, it is the responsibility of the taxpayer to ensure that it is understood correctly, or wherever there is a discrepancy, it is reported correctly, or brought to the notice of the person who's initiating the transaction, and then solve it then and there, instead of piling it up and keeping it till the year end. So when it comes to GSTR 3B, what is going to get locked with effect from July? That's why this session is very important, which we are doing it in the month of August, is that there are certain fields are going to get locked, right? So we know that in the last July 2022, they introduced temporary reversal, permanent reversal, right? And also in the table 3, in table 3, if you look at it, this is about output. So when I say output, when I say table 3 out, we will bifurcate into 2. So table 3 can be bifurcated into, one is the outward supply and other one is a liability. When it comes to outward supply, it is like taxable supply, which is B2B, and then zero rated supply, exempted supply, and non-GST supply. This is what comes in the table 3. And also another field wherever there is an inward supply for which RCM is applicable. So now whatever this was supposed to be effective from July 2022, but we are, because of various reasons, because the taxpayer should also take the law, grasp it, and then understand the system in place, it has been postponed. Now we are sitting in July or August 2024, where locking has become mandatory. So whenever you are filling up these details, you have to be extremely careful. So now let's move on to input tax credit reporting. So when it comes to input tax credit reporting, table 4 is very important. In July 22, there were a lot of changes with respect to ITC, whether it is a temporary reversal, permanent reversal, ITC, how it has to be reclaimed back, and what is the reconciliation with respect to opening, what was availed, what was utilized, what was reversed, what is the closing balance. I am sure how many of us are strictly following whatever is stated in the law or GSTN portal, but I'm sure the day will come, the department will ask for the clarification. So reversing any input tax credit, I will tell you what are all the issues first. Okay, when it comes to table 4, in particular table 4A, which shows the gross available input tax credit, it means that all the input tax credit, it can be eligible, ineligible, blocked, irrespective of whatever it is, everything needs to be included in the gross available input tax credit in table 4A. But some of the taxpayers, what they do, they say that I am sure that this input tax credit is not eligible. I am sure that this is not required for me. I am sure that I do not want this to be availed. My management has given instruction not to account, not to pass too many entries in the books of accounts in my, bookkeeping, while bookkeeping. So I do not want to pass this many ledgers. So what they do, they fail to capture wherever there is an exempted ITC or blocked ITC or ineligible ITC. So they will end up in problem. When I say there is a table called 4A, which requires reporting of the entire ITC. Let me give you an example. You have few transportation bills. You have few civil work bill. You have some of the motor car credit. Okay, you know pretty much well that it is not eligible, but still you are required to show it under table 4A. Then comes the reversal. When it comes to reversal, what they do, there are two types of reversals are there: temporary reversal and permanent reversal. So when it comes to permanent reversal, if you are very confident that that input tax credit you are no longer going to avail, then there's no problem. You are free to reverse. Wherever you have some discrepancy, where there are certain input tax credit which are debatable, or there are certain input tax credit which you want to take the confirmation from management, where you are not sure whether it is eligible or not, say health insurance premium paid, input tax credit relating to that, you are not sure. In such cases, please do avail, but reverse it under temporary reversal. Later on, after discussion, you can always reverse it through permanent reversal. Do not in a hurry reverse it through permanent reversal, then bring it back, then reverse it through temporary reversal becomes very difficult, right? So from going forward, from this month onwards, these are all some of the things which we have to take care. Whenever you are reversing, take care that make sure that you reverse it through temporary reversal, so that the table 4C becomes easier. Then what is ineligible? 4D is only for reporting, which says that whatever is set under section 17(5) or any other ineligible input tax credit needs to be reported under table 4D. One more difficulty which we face in the recent times is that earlier, if you look at GST 2B, the net, in the sense net of credit note was coming up for reversal. Gross will be there. Then the another sheet you will have a reversal. Credit note will be there. So you have to manually reduce it and then avail the input tax credit. Assuming a scenario where there is a blocked credit, right? Blocked credit is there for civil repair, for civil construction. You have not availed it, right? You have not availed. If you have availed it, there is no problem. Availed in the sense I am talking about the table 4A. If you have not availed that, you have availed only the eligible input tax credit, whereas the supplier has entered the original supply as civil supplies, at the same time civil work, at the same time he has entered the credit note also after 2 months. In such case, when the system is taking the net input tax credit, your gross itself will be showing at a higher amount to that extent of credit note. So you have to be extremely careful. Whenever there is a credit note comes, it is you have to take due care while taking the gross and then netting it off with the credit note and then taking only the balance. Credit note, you will never know when you will get. You may get it after 2 months or you may get it after 3 months, because credit note has got time period as per GST law. So take due care. And then there are certain Rule 42 reversal. It may not be applicable for all taxpayers. Rule 42 is applicable only wherever there is a taxable and exempt supplies are involved. In such case, whenever you are doing a Rule 42, it is important for you to have a reconciliation of invoice-wise reversal. Invoice-wise reversal. It is just not my eligible input tax credit is say 12%. Then 12% you are on the total invoice you are reversing. But it has to go through certain steps as prescribed under Rule 42. All personal bills or exempted 5% should go, then all exempted bills should go, then common credit. After removing all that, then you are eligible for reversal. That also needs to be done at an invoice level. Then reconciliation of table 4D, ineligible, also very important. So far I would have used the reconciliation in my 30 minutes of presentation more than 50 times. So you can see the importance of reconciliation when it comes to GST. Now, let's move on to the next important one. IMS, Invoice Management System, which was introduced in October, which was effective from 14th of October. So this is one system introduced by GSTN to facilitate the communication between the supplier, right, and the recipient. Earlier, what was happening, whenever there is a difference in input tax credit or delay in filing of returns, either they had to manually call or they had to send the email. So to avoid such back and forth communication, they introduced the system in October 24, and this is in functional for, I would say, more than, now it's about 6 months, more than 6 months, it's going very smooth. So the taxpayer, the supplier has got, the recipient has got options to either to accept or reject or keep it pending. And it has got its own rules. When you are accepting, if you do not do anything, it is considered as deemed accepted. So this, after introduction of this IMS, it's going to facilitate the taxpayer as well as the department in reducing the disputes. Otherwise, the minute it is delayed or wrongly reported, the recipient can immediately highlight and say that there is some error in the reporting by the supplier, so that as and when it is reported, immediately he corrects the data, then correct input tax credit can be availed by the recipient. So that's the reason why this IMS was introduced. Going forward, right? Going forward, as of now, it is not there. I'm not telling this to scare you. There is something, there is a section, which is section 38.2, which is not yet notified. Rules have not yet come. Section 38.2 imposes certain important conditions to be fulfilled even for availing input tax credit. Today, if you look at it, you are availing the input tax credit. This is what is called as seamless input. We call everything as seamless, but what is seamless, God only knows. So when it comes to GSTR 3B, if you are able to avail whatever is directly appearing in GSTR 2B, that is seamless. But it's not so. Whatever comes in 2B, you have to do your own reconciliation and then verification from GSTR 2B, whether it relates to you, comparing with IMS, comparing it with IMS, whether it relates to you or is there any, it does not relate to you, is it eligible credit, or can you avail the input tax credit, or where it has to be reported. All of these things are to be verified before availing the input tax credit in the GSTR 3B. So when it comes to IMS, further strict conditions are going to get imposed in the following months, right? So now itself GSTR 2B you cannot avail. Furthermore, there are certain conditions which are going to get implemented. So I am just skipping through all these things because these are all IMS which we have handled long back, and GSTN also has issued advisory note saying in case if you have erroneously done something in IMS, how it needs to be rectified, how it has to be corrected. Those FAQs are also released. Probably you can go through when you have time. When it comes to one important thing, what I wanted to bring out here is that section 38(2), right? So what are the conditions it is going to impose on the input tax credit that is available or not available in your GST 2B? So first is that you have certain input tax credit in your books, right? You are expecting that to appear in your GST 2B, right? So what way, as we stand today, what are the circumstances under which you may not get that input tax credit? Only two ways: either it is wrongly reported or he has not reported at all, right? So either, that means, assuming you are expecting some 1 lakh of input tax credit because you have the bill, valid bill, he has rendered some services to you and you have also made payment to that vendor, right? So you see that he has filed the return, he has filed his GSTR1, it is appearing in your GSTR2B, you are happily availing it, no problem, right? But going forward, this is also going to be some kind of disputable thing, further stringent. I will not say disputable, it's going to be further stringent. What are those things? If your supplier, that means your vendor supplier, is a newly registered person, right? You are buying something from a newly registered person. You do not know whether he is newly registered or how many years he is registered. He is a valid vendor and he's showing his GSTR1. I mean, he has filed his GSTR1, he has paid his due taxes. That's why it comes to GSTR2B. But still, if he is a new vendor, then there is every possibility that your input tax credit can be deferred. I'm not saying it will be rejected, it will be deferred. So if you read the provisions, the auto-generated statement under subsection 1 shall consist of details of inward supply in respect of which the credit of input tax credit may be available to the recipient, and the details of supplies in respect of which such credit cannot be availed, whether wholly or partly by the recipient, on account of the details of the said supplies being furnished under subsection 1 of section 37. 1. Person with such period of taking registration. Assuming somebody has taken registration 15 days or prior to registration you have purchased, right? There are certain input tax, he can always later update, right? So you will not be eligible to avail such input tax credit. Second, person who has defaulted in payment of tax and where such default has continued for such period. How do you know he has defaulted? You do not know whether he has defaulted. What kind of default? Probably he has not paid his demand dues, or he has not paid his penalty. We do not know. I have availed only his services. I do not know his history. I do not know why he has paid, not paid. What are the other his financial prudence? But still, there is every possibility that your input tax credit could be at stake because of his conduct. Third is that the output tax payable by whom in accordance with the statement of outward supply furnished by him. Assuming that there is a outward liability of say 10,000, he has reported in his GSTR1, whereas he has paid only 9,000, right? There is a difference of 1,000 on his return, but still, as a service provider, as a service recipient, your input tax credit may be impacted because of his short payment, right? You might have purchased only for 500 worth of input tax credit, whereas his liability is 1,000. You don't know. The government also, how is it going to assess? We don't know. But as we stand today, this is what the provision. If there is any shortage of payment between GSTR1 and 3B, anybody, every recipient of his services or the buyer of his goods will be denied input tax credit by this provision. Next is that registered person. has availed credit of input tax credit of an amount that exceeds the credit. Next is even more. If he has availed input tax credit much more than what is appearing on his to be, say for example, you have a supplier, right? He has supplied to you, right? But you are eligible to take the input tax credit if it appears in your to be. Look at his to be. He has taken more ITC what was there on his to be. So his to be was 100, whereas he has availed on his 3B, say 120. Because of that also, your input tax credit will be denied. We do not know how the government is going to track going forward, but I am sure there will be mechanism to track all this. That's the reason why this rule has come up. So in my view, if you ask me, they are going to give the grading which was expected for a long time, for all the vendors, all taxpayers, depending on how they file the returns, whether they are payment of taxes, even if it is IFF, whether are they correctly filling up the details, paying the taxes, even if they are QRMP. So a lot of criteria will be there. So depending on that criteria, they will be grading. So anybody wants to avail their services or buying goods from those vendors, they may have to do some sanity check on their credentials, credibility. Then only they will be able to proceed with that vendor. So the department, instead of losing out and creating disputes at a later point of time, they want to ensure that all these things are settled even much before any vendor they are engaging with. That's the reason why even now, if you look at it, many of the companies have a standard practice of collecting their GST certificate to ensure that directors or authorized signatories are valid. If they are not registered under GST also, they are collecting the declaration stating that their turnover is less than 20 lakhs. So these are some of the things which the process is already in place. So this is going to be an extension, further extension of this. So to sum it up, any input tax credit we may call as seamless, but it is not seamless. It comes with lot of hurdles, and any outward supply with GSTR 3B and filing of GSTR return, we may call it as easy, but it's not that easy as we think. It requires a lot of workings and then due care. Lot of paperwork and documentation and reconciliation should be done before we upload the returns. So filing the correct return, availing the input tax credit correctly are the key for ensuring that we report the correct taxes to the government. As far as GST is concerned, GSTR 1 and 3B is only a self-assessment tax. That means you are only assessing your tax. When you are assessing your own tax, if you are doing it wrongly, then later on correction also becomes difficult. So the point what I want to drive here is that do the reconciliation, have the reconciliation in place. Wherever there is a mistake, just do it then and there instead of waiting for the year end. Any reversal of input tax credit attracts 18%, and availment of wrong input tax credit also attract penalty, blockage of your GST number and other consequences. So it's important that you comply with the taxes, understand the return and do the returns correctly. Now, because of shortage of time, I have one more slide on input service distributor, which is in, many may think that something new has come up in input tax credit. Nothing, it's just one small change in the RCM, which is effective. But there were a lot of earlier prior to that, whenever a company or entity has got multiple branches, should they go under cross charge, or was it mandatory to register under input service distributor? But now, from now on, if you have multiple branches having distinct GSTN numbers, different GSTN numbers, as far as GST is concerned, they will be called as distinct persons. So instead of raising it as a cross-charge mechanism, take input service distributor registration, pass on the input tax credit in proportion to the services that are rendered by other units. To put it simply, assume there is a head office. Say head office is in Delhi, right? The head office is in Delhi, and it receives all the invoices. What kind of invoices? Rent it will have. It does not render any outward supply. There's no sales at head office. Branches are in Chennai, branches in Mumbai, branches in Bangalore. So in all other parts of India. So whenever there is a advertisement charges or any audit fee or any other common expenditure for company as a whole to be done, it is done centrally at head office, right? So it does not relate to only head office, because head office has got nothing. Head office has got no supply, no sales. If that being the case, it is necessary for the head office to take input service distributor registration and then distribute to the credits commonly at the back office work. Whatever is done by the employees, cost is shared commonly, audit fees shared commonly for all units. So these are the sum of the cost which needs to be allocated in proportion to their turnover or any other mechanism. So this is what is all about input service distributor. So this many entities have started following from 1st of April. I'm sure all of you are tax compliant, and with this we have come to the end of this session. Thank you so much for your patient listening. If you have any queries, you can always raise. Thank you. Somebody's raising hand. Mahesh. I have unmuted you. So is there anything in the chat box? Let me see.
Hello? Hello?
Yes, sir.
Hello?
Hello.
Sujata. Just one question I had.
Yes.
In ineligible credit, you said first you have to enter all gross. Gross will reflect. And then what is it to be reversed has to be done based on temporary reversal and all. Finally, the ineligible credit is coming. How does it come? Like automatically it comes, or we have to enter? I'm not very clear the process. How does it?
See, table 4A in GSTR 3B, you have to enter the entire input tax credit, including ineligible, whatever is that. Okay. Then if you know that at the time of reversal it is ineligible, it is completely not eligible, then you can reverse it under in table 4 in part B, right?
Okay.
And in the D column in table 4D, you have to say how much you have reversed relating to 17.5. That is blocked.
Okay.
So you need to have a reconciliation of whatever you are reversing as a permanent reversal.
Okay. Comes as ineligible finally. Okay. Okay. Fine. Thank you. Thank you.
Mr. Mahesh is raising. So thank you so much. We are closing the session. Thank you so much for attending. Stay connected for we'll see you in the next sessions, more on GST and other
Are you audible, ma'am?
Thank you. Yeah, audible, sir.
Ma'am, I have one small clarification on export ITC. We are purchasing a local materials from local vendors, and we are exporting it.
Okay.
Hello.
Yes, sir. Yeah, I'm able to hear you.
Can we be able to claim the ITC for exported goods?
Sir, you can claim it as a refund. You are sourcing it locally and exporting it.
We are not paying tax. We are billing as a without payment of tax, and we are giving a LUT and declarations. So we are not collecting and we are not paying.
Perfect. No problem, sir. You are doing export of sales. When you are doing export of sales or services, the input tax credit that you are availing towards rendering of those outward supply is eligible for refund. So within the time limit prescribed under the Act, you can always claim refund on your input tax credit.
Ma'am, but we are not claiming the refund. We are directly took the ITC. Is that okay, or we need to rectify that?
No, but you are carrying forward that ITC, no? Like you have other taxable supplies also?
Yes, ma'am.
You can adjust it then. You can adjust your taxables again. You can adjust.
Okay, ma'am. Another point is, ma'am. So RCM is applicable on staff welfare expenses, ma'am?
No. It is not applicable.
Yeah, recently some this assessment has gone to my friend concern company. So they are demanding RCM. You have to pay for staff welfare expenses too. So that's the reason I just wanted to get the clarification. In blocked credit, it is nowhere mentioned. You have to pay the RCM. In the RCM section also, it is not mentioned, and also not in the block section. So that's the reason just I got it out.
Sir, notification number 13/2017 clearly says what are the items, entries under which RCM is applicable. So on staff welfare, what line item you may have to see. It may be grouped under staff welfare. Probably inside that you have to go in detail under what reason they are saying that RCM is applicable. We just can't go by the heading that is mentioned in the financial statement.
Okay, ma'am. Thanks a lot. Thank you so much, ma'am.
Thank you. All right. Thank you. Thank you once again. See you. Bye-bye.
See you, ma'am. Thank you.